Hello, everyone. Hey, I wanted to just give you a quick summary of the new bill, the Inflation Reduction Act. We're starting to get, now that it's been passed, we're starting to get more information on it, a little more detail. So just want to give you a quick little summary. And some of these things, some of them might be good for you. But, everything has pros and cons. So we'll see. First of all, remember that this is what was originally called the Build Back Better plan, and I think got renamed a couple times along the way. Now it's called the Inflation Reduction Act, IRA, which is, not to be confused with an individual retirement account. But I think it might even get renamed a little bit more before it's all wrapped up. Number one reason, inflation. It's saying it's an Inflation Reduction Act, but pretty much all the economists and the people reviewing it, Democrats and Republicans, are saying it's probably not going to reduce inflation. So also remember that this act is spread out over a 10-year time period. So some of the bigger numbers, like for instance, the act says that it will increase revenue to the federal government by $324 billion. Now that is over 10 years. So that's about 32 billion a year on average. And, our country spends over 4 trillion a year. So 32 billion. And just to give you a little perspective, $1 trillion is 1,000 billions. So it says over 10 years, $324 billion in increased revenue over 10 years. And if that 324 billion number grew to 1,000 billion, then that would equal a trillion. So just giving you a little perspective on the numbers. And again, spreading it over 10 years, 32 billion a year. However, in the first 3 or 4 years, it is increasing the deficit because it's not adding revenue. The added revenue begins to come in the latter years. So it doesn't really decrease inflation. It actually runs up inflation potentially a little bit in a few years in the beginning because of those deficits. Also, there's a new tax in there on large companies, and it's a 15% minimum tax. Now that is not technically inflation, but most of those companies are going to pass that cost on to us, and so we're going to be paying a higher price for things, which kind of is quasi-inflation, so I would count that as inflation. But that additional income is part of that 324 billion over 10 years. Okay, estimates are over that 10-year period that we will end up losing about 29,000 jobs. There's also a 1% excise tax on stock buybacks in this bill. Not real sure why they're picked. That's when a company decides, Warren Buffett liked to do that a lot, buy your own stock back when it's low in price. They're adding a little excise tax to that. That's maybe not a big deal. There are some good things with Medicare, and they're imposing drug pricing provisions, which is going to save about $278 billion over 10 years. Now, that's all part of that original net number, though, that I gave you. And the nice thing could be that in 2025, this bill is actually capping out drug costs under Part D of Medicare at $2,000. Now, there's been some cancer drugs and things that people are paying a lot more than that $2,000 currently. So, probably that's a good thing, capping out those drug costs for people on Medicare. They also are going to limit cost sharing for insulin to $35 a month for those on Medicare, and that begins in 2023. Also, the Affordable Care Act, they had expanded that a little bit, the subsidies there, and that's going to continue to be expanded for another 3 years. Let's talk just quickly about tax credits for green energy. There's a lot of that in there. Part of that is for electric vehicles. So the $7,500 tax credit per vehicle is going to continue, but there's going to be a lot more stipulations. Number one, this is probably a good thing. The batteries for those electric vehicles, if you're going to get the credit, the batteries have to have been made in North America, trying to move away from getting things from China, which I think is a good thing. So also, it's 2,500 base, and then you get paid by the kilowatt hours of the battery, and it's like $417 for every 5 kilowatt hours. Still can get up to $7,500. So, but also cars, electric cars have to cost less than $55,000. SUVs have to cost less than $80,000 to qualify. And now they put some earnings on there. If as an individual you make more than $150,000, you don't qualify. As a married couple, if you make more than $300,000, you don't qualify. So that's, you also, if you didn't pay that much or owe that much in federal taxes, then you only can get a tax credit for the amount that you owe. And all of you should kind of understand tax credits are different than tax deductions. A tax credit means if at the end of the year you owe $5,000 in taxes, a tax credit of $5,000 goes right towards it and you don't owe anything. So tax credits are definitely much nicer than tax deductions. So they're also doing some solar, the solar panel tax credits, that's in there as well. Now, there's a net revenue of 128 billion after spending 80 billion for more IRS enforcement. So that's again over 10 years, but they're hiring 87,000 new IRS agents. You know, I don't know what I think about that one. Probably not too good, but that's pretty much it. Those are the breakdowns. Those are the things that are happening in there. A few of those things are good. You know, like the cap on the prescription drugs, and maybe now you can buy a used electric vehicle car, something around $22,000, $23,000, $4,000, and still get that $7,500 credit if it meets all the other criteria. So now it's coming down a little more into the average hardworking American, where maybe it's going to help a little bit there. All in all, that's how it all sums up. Wanted to bring you just a quick summary of it. Hope that helps, and we'll look forward to talking to you later. Thanks.